A lot of the venture model is built on trust. The reason is because VCs, they see found all the time. They've made investments. They've had investments fail. They know your stuff is messy. They know my stuff is messy. If you're not aware of what the messiness is and what the big risks are, it just looks like you don't understand your business or your market, or you're not taking this seriously.
I'm Anastasia. I run all things startups at Notion, and welcome to Founder Fridays, where we sit down with builders and founders who have been in the trenches to talk shop, product design, real lessons, everything that the founders usually do not put on a slide deck, whether talking to their investors or customers. And I'm super excited to be joined by Sasha Orloff, our friend, the serial fintech founder, and now CEO of Puzzle, a modern accounting platform for startups. And he has begun his journey a while back, raised over 1 billion across all his ventures and backed by top investors like Gokul Rajaram, Ayo Majolo, General Catalyst, just to name a few. But super excited to have you.
Hi, excited to be here. Let's have some fun.
So before Fuzzle, you were building two companies at the same time. Like, one is not enough. Overachiever. Like, what led you to start Puzzle? Like, how did this early founder experience shape your approach this time around?
Yeah, I mean, generally, I think building a startup is just hard. And we get all of these really great tools that help us build the company and bring to vision this idea that we have that we're excited about. And you can use these tools in the finance, at least, like Stripe and Gusto and Rippling and Brex and Ramp. And then it all goes to this old piece of technology called QuickBooks. It's just not geared for how businesses are built today. And so I think that was one of the ideas that I started to get excited about and then couldn't stop thinking about.
Yeah, totally. I mean, if you think about a lot of founders kind of underestimate what goes into the building process, but also you need to build a certain runway for you to build, right? Like, looking back, what is one thing that you got maybe wrong in the first two companies in general that shape how you do it now with Puzzle?
Well, I mean, I generally, I think it's easy to get distracted with so many exciting things the moment that you kind of start to become a founder. There's dinners and events, and there's conferences, and there's all this stuff that we have to do around social media now, and all this stuff. And at the end of the day, if you're not building for your user and you're not listening and talking to them, you can just waste a bunch of time with I think, or I don't know, or maybe. And so what I think the mistake that we tend to do quite easily is get into a habit of building in our own vision instead of building in the vision of the reality of the market and the user, and underestimating the switching cost of inertia.
Yeah, totally. And I mean, if you think about the the timing in startup life, it's kind of everything, right? Like, when it comes to building your MVP, when it comes to fundraising. And I think today, particular for our talk, going back and knowing that you've raised over $1 billion across different ventures, I would love to open up a door a little bit for founders that are maybe fundraising for the first time, maybe second, maybe third, I don't know. But there's always a learning opportunity here, right? So how did you know it was the right time to start that process for Puzzle? And maybe what would you do for different around right now?
Yeah, well, this is all sort of assuming that you're building a venture-backed startup, which is not the only way to go. There's different capital sources. There's growing slower. There's bootstrapping. There's owning and controlling your destiny. The venture path is a very specific path, but I think there's sort of two key lessons sort of in here is You're fundraising because your business is ready, or you're fundraising because you're running out of money. And fundraising when you're running out of money is a really hard position to be in because we have such little leverage with investors as startups. Like the one leverage we kind of have is FOMO, like you're going to miss out on the next big thing. And venture capital is defined by power law, meaning the few super winners recover for all of the other either break evens or small returns or losses that a fund is going to have. So are you going to be that one breakout winner? And the best way to demonstrate that is by winning and by having this growth graph. And if you are growing and you're growing quite quickly in a way that can show line of sight to building a really big company, there's nothing better than that. It's the one thing that kind of gives us an advantage in as a founder. So I'd say fundraise from a place of strength, which means be ready. Be ready when your business is ready, and fundraise from a position of strength. It's always hard. That just makes it a little less hard.
Like, if you think about it, like going back and maybe kind of bringing back some of the memories from your like first fundraise, or what is your mental model for like kicking off that process? Like some folks is like, okay, I have 6 weeks, I'm ready to go. Others like, oh, I'm always kind of in a fundraising mode, which is always be fundraising. I think it's still the mentality that never goes away from the founders. But like, what is it about you, right? Because it's not just about the great pitch; it's about building that system, building that like mental model for yourself.
Yeah, I think one of the challenges, and so this changes quite a bit by stage, meaning like in the early days when you're just starting out, you have an outsized role as the founder in so many aspects of the business because there's just not that many people and there's so much that's still unknown. But I think the part that is always the hardest is when you're fundraising, it takes a longer time and more effort than you expect, even when you're in the most absolute, like seemingly perfect situation. And so the better that you can be prepared and have everything ready just makes it easier. And what I mean by that is I, for example, am always constantly iterating on my fundraising pitch. I keep a really diligent data room. I keep my financials in order because these are the things that keep a fundraise when your business is ready to fundraise. Are the things that help you get it across the finish line. If your business is growing really crazy and you don't have a way to introduce it and help people understand, like maybe you can just show a growth graph and that will work, or you've hit some really amazing technical breakthrough, whether it's sort of that next phase of a clinical drug trial, or you've built a prototype of some hardware, or your software start now actually solving a product market fit. And you don't have your accounting in order. Well, like it's hard to fundraise from a venture capital firm if you're not doing the things that are like legally required of your business. And so generally, I think it's easier just to continually think about keeping this clean and keeping everything organized rather than like waiting all of a sudden your business hits and then the rest of your stuff is a mess. And now it takes months and months to prepare and get ready.
When you think about your system or your setup, like once you commit to raising, it's like, okay, I'm ready to go. How do you actually prepare? Like, what is your, like, where you keep your tracker, like how you think about your pitch, like what are some of the dashboards that you use?
I sort of lived through my experience and then I started vetting this with other people. And what ended up coming up was there's kind of 3 core tools that I use. I use Notion and I'll talk about how. I use Puzzle and I'll talk about how, and I use ChatGPT and I'll talk about how. Those are my 3 core tools, and maybe Gmail also. So those are the 4 tools. Gmail is, I think, the obvious one. The how I use Notion. So I started fundraising and I keep a when is the best time to fundraise. I keep my investor CRM. I keep my diligence checklist. I keep my fundraising narrative. I keep my memo. I keep everything in Notion. It just makes it really easy. And actually, we created templates, the Notion templates. You could just sort of search for Sasha Orloff for puzzle. The stuff that I actually use to do my actual fundraising and grab them, adapt them, modify them. And I try to do my best to kind of modify it by stage, because fundraising for a seed stage is different than a sort of formal venture round is different than a growth round. But all the tools are there. I use Puzzle because it's just the easiest way to have accurate accounting in real time. And that's just a condition of closing for every venture fund. If you don't have financial statements, that's like a required by law piece of important compliance. Investors use that to help understand what your valuation is. Now, not necessarily at the angel or the pre-seed round, but when you're doing sort of more formal rounds. And then ChatGPT, because it's just an easy way to continue to battle test my fundraising.
If you think about raising capital or fundraising, it's not just about capital, it's not just about money. How do you approach the investor outreach? Obviously, today it looks very different for you than how it was maybe, a few companies back. But I think for folks that are just learning and building their networks from the ground up, if you think about the social capital, it's very, very hard to build it and very easy to lose, right? So how do you filter for the right investors?
Yeah, I think this is a really important question. So I'm glad you asked. Um, so I generally think it's like a really, really formal version of dating, except you can't ever break up, right? And so imagine having to go and meet somebody that you're going to be married to for the entire life of the company or your entire life. There's ways that you can help increase the odds of success. And so part of that is, what's your most attractive story and how do people get to know you and build trust with you? And what else are they thinking about and evaluating? And so there's sort of the things you can do. You can build in public. That's a way to help them get to know you better. You can spend a lot of time on your investment memo or investor pitch deck, your About Us page on your website to kind of show what you stand for and what you believe. You should get to know the partner. They most of them publish a bio on their website. They have a LinkedIn, they have a Twitter, most likely. They're writing and publishing. Is this somebody who helps you get the best out of you and helps complement what it is that you're trying to build? And so and then what is it that you want? I think that's an important thing also to determine. Do you want somebody who's actively involved? Do you want somebody who's really hands off? And what is the style of that firm? And then lastly, do references just like you would with anybody else. It's very easy to say the thing that you want to hear. And investors are particularly good at this. That's their job, is to convince you they're selling a literally fungible commoditized product called money. And so they are really good at marketing that money as value add. And so I generally think, make sure that you're spending time and trying not to rush into it.
Yeah, totally. And I think what I've seen some of the founders, the biggest mistake that they make is they consider it a firm making an investment in them versus a person or a partner, to the point that they would email multiple partners and the same firms with the same pitch, and I'm like you can't do that, right? So I think doing your research is very important, and it should be a part of the your prep agenda. If you think about some of early conversations, assuming you don't have a network that you do right now, what kind of signals do you look for to know okay, this person gets me, I want to partner with them, or at least I want to go on a second quote unquote date with them, right? Because usually the first meeting, the goal of the email is to get to the first meeting. The goal of the first meeting is get to the second meeting, right? So it's a funnel.
Yeah, I think there is a couple sort of important things to think about. I think the biggest mistake that people make is they haven't thought through what it is they want. And so they're thinking about it from almost like a sense of defensiveness. Oh my God, I got to have money and I'm just going to try and spam everybody on the market and see what happens and go. But I mean, similar to dating, you want to feel like it's a good mutual fit for both sides. And some people invest because they like a thesis, and some people invest because they like a founder, and some people invest because they like a market. And ideally, you find all three of those come together, and that's where I think the best types of relationships happen. One of the other things I think people do is they try and just tell the best version of their story. So you should be pretty honest with what it is that you like, what it is you don't like. and what it is you want, don't want. It's going to come out eventually, and a lot of the venture model is built on trust. The reason is because VCs, like, they see found all the time. They've made investments. They've had investments fail. They know your stuff is messy. They know my stuff is messy. If you're not aware of what the messiness is and what the big risks are, it just looks like you don't understand your business or your market, or you're not taking this seriously. And so I don't think you have to hide some of the things that are big material risks to the business. In fact, I lead with it. I said, here are the five, and here are the five reasons you shouldn't invest. And here's what we're doing about it. Or here are the five things that people think are really big risks. So let me tell you why I don't think they are as much. Instead, I think these are the five bigger risks. Stuff like that just builds trust in throughout the process. But I guess to get back to your point, how do you actually build your early network when you don't have one? Well, there's no right answer other than it's hard. I wish it was easier. But there's ways in which you could make it easier on yourself. So there are big venture like conferences. So I would go and prioritize going to these meetings and go with an agenda and look at the list and actively go try and build your network. There are a lot of ways to build your network online. Twitter and LinkedIn are great ways. You start following people, start commenting, start getting to know people digitally. And so when the time's ready for your business to fundraise, you sort of have a set of a target list and you can personalize it. Nobody likes these generic AI emails or these like just generic ones of like, I'm looking for money. Cool, but why me? And so I think that the better you can do, and it's hard to fake that, the better you can do at identifying what it is you want, what it is you need, and why they are uniquely suited to probably like your business market or you, just helps make those outreaches more successful.
Yeah, totally. I love that. I think another important point is like, what can you do for them, right? Like that's how the social capital, like some of the folks that may not necessarily be based here in SF or the Valley, is like how I think when I ran my own accelerator before Notion, that's how we always taught the founders, right? Okay, like what can you do for a person that you reach out? So you have to approach it was like provide the value first before you ask something in between or like in return. And then I think like for the relationship with VC is like very similar. I just had a lunch with another investor, and he was sharing like how his portfolio of folks he even passed on referring founders to him, right? So like it's a very small ecosystem. Um, so I think like another portion is like build a relationship with portfolio companies, right? Like, because I'd imagine if somebody would reach out to you and be like, "Hey, Sasha, like this is what I'm building. This is like what I'm looking for. Like, can you make me an intro to your investor?" Assuming there's a good fit, and then they can put like all those bullet points in order. You probably would be more willing to do that versus, and they would probably get a better return out of it versus like cold emailing to the investor.
Yeah, it's the in a lot of the world, there's just a transaction. I want to buy. I go to a store and I want to buy milk. Like that's just a transaction, um, and that's okay. That's what it's made for. Fundraising with venture capital is a transaction, but it's a transaction based on trust and reputation and belief. And so it's a transaction that starts a relationship, whether you like it or not. That person is on your cap table. They own a portion of your company that you're building. They have a say in your time. They have a say in the future of the business. They have a say in whether or not you can fundraise or whether or not you can sell the company that you're building. And so it's an important relationship. And so if you treat it as just a transaction, then that's it. If you know the person, you've added value to them, does it mean they're going to invest? No, but like you said before, they're probably going to at least open the doc. They then might open the meeting. They might then give you feedback on how to get better, just for what it's worth. Almost every round that I've ever raised was preempted by somebody that I pitched and passed on in the last round. And so it's a small community that very much relies on introductions and reputation. And that makes it hard when you're a new person. The best way to tap into it is to build the best company. Like having massive growth and solving a big problem for users, That beats everything.
I think like you kind of touch on an important problem or like focus area that most of the founders just want to build the product, right? And but it's sometimes not enough to extend your runway, and you have to go and networking, building your network is like a full-time job on its own. But if we talk about what actually gets investors across the line, assuming like, okay, you got the email, they're like, let's talk, let's meet. Like, what are the metrics or traction signals were most important during your race? And like, they got investor excited and they're like, I want to learn more, or like, I get your vision.
There's one that almost always in the history of the world trumps everything else. It's the largest contributor towards the regression model of yes, and that is growth. So growth is great. Growth with a story of great unit economics is better. Growth with a story of great unit economics in a large defensible channel, even better. And growth with a great story of unit economics in a big defensible channel that can lead to 100 million of revenue or more is the best.
If we move to the next stage, okay, you got your money, investors say, cool, you got them, add them to the cap table. How do you manage relationships with your investors post race? Like, what do you have a system?
Write investor updates. Like if somebody's invested in you, they're an owner in the company. They're already now on your side. Like they want you to be successful. Sometimes I think people understate how fast and wide the Whisper network is in the venture community. And so if you are sending updates and then you stop sending updates, then people are expecting and understanding that you're just not doing well anymore, and then people just mentally write you off. If you don't send updates at all, then people aren't probably going to like think about you ever. And when you need to fundraise again, hopefully because your business is just hitting it and you need to go raise again, or on the other side, you're just running out of money and you're close to hitting some milestones, meaning you're not in shutdown mode, and you haven't kept your investors up to speed, what do you think your new investors are going to do? They're going to look at who invested in the company and they're going to reach out. So they're going to ask your investors. Almost never are they just going to blindly write you a check and just go away, because it's either their personal money or they're investing on behalf of LPs. So you want the people who are already invested to be excited about what you're doing and to understand what's going on, because they're going to be asked. And at the end of the day, as an investor, they're not usually trying to think, who is the best company doing this very specific thing? Meaning they're not comparing you against the peers of your competitive set. They're comparing you against all of the potential opportunities that they have to invest in, which they're hearing pitches tens to maybe even hundreds per week. So the more you invest in them, then the less it feels like a transaction. It feels like you're doing this, you're committed to it, and you're doing it the right way. And so I think the best form of that is just sending a monthly update. Then you get bigger, you can do it on a quarterly basis. It's also just a really good exercise. Even if you don't send all of it, it's just a good exercise in just thinking about your business from an investor perspective.
I couldn't agree more. And I feel like the fundraising landscape is just such a constantly evolving market, if I can call it a market. And even in the last like 2 or 4 years, there's so much changed. If we like zoom out for a second, obviously now I think the bigger trend that we're seeing are like smaller teams raising larger rounds with like higher valuation, which is not necessarily like a template for everybody to follow, but we're definitely seeing like a different shift, right? So curious how you think about it, like how sustainable it is, like maybe what other trends you're seeing in the market that you think like early stage founders or like the first time founders should really understand before they enter the arena.
Yeah, I have two reactions to that. I think the first one is expectations are just higher now than they've ever been before. Like we're seeing companies generate faster revenue than ever in the history of the startup world with less burn. Now, there also is sort of this like the fastest time from 1 million to 10 million and back down to 1 million because AI is just changing so fast. But anytime there's like a lot of market shift and volatility around something like a platform shift, like AI There is some people who are really early on and aggressive and ambitious because they know something's going to change. They just don't know what it is. But then on the flip side, there's also a lot of hesitation because we don't know. There's so much uncertainty. And so that just makes it harder. It's harder now because we're in the middle of a massive platform shift. I think that it was, I think Parker Conrad from Rippling who sort of made a tweet about somebody who posted like, we're going to have a 10-person billion-dollar valuation company around. And his response was something like, yeah, you can do that. But what about the company that can also build what you can build with 10 people, but they've also raised a massive round of funding and they're investing heavily in sales and marketing and continued product development? Like, you can't compete on that over time. If you have a small team that built something really quickly, another small team or a big team can come by as long as there's the same ambition and insight. And so I think you have to have a healthy sense of perspective and first principles thinking of like, yeah, that is cool, but it also, it means competition is fierce.
Yeah, I mean, you're competing for exactly same money from exactly the same top firms, right? So it's like you need to show the vision and conviction, and if you don't care enough or don't show that you care enough about the vision, it's like why would other people buy what you're trying to sell here? So I think it's a very interesting point that you brought up about smaller teams, but then there's like the AI enter the space, right? Founders still expected to show AI part of their story, even though it's not the core to their product. Is it good to even do that? Like, because right now, obviously, everybody's saying I'm an AI company, which is not really the case. But I'm curious how you thinking about like building puzzle and just like working with your peers. What is that? What is that expectation now in the market?
It's so much easier to copy now, right? So you're, I think the Windsurf CEO had made a comment on the sort of YC podcast before that like the only competitive advantage is can you stay ahead of everybody else? Can you go? And as soon as you get lazy and tired, somebody's gonna do everything you do and then pass you even more. And so I think that it's already exhausting enough to build a startup, and now AI, I think, is making it even more exhausting, but at the same time, more fun. This is why we do it, because it's a ton of fun. So I would just sort of think about once you hit that product market fit and you feel it and it's really exciting, don't lose sight of your core business. Like, it's very tempting to go off and think about what else could we build that like expands the surface area. Make sure that you're keeping your core product best in class and continue to invest in it. But also, you now have to really think about the defensibility, because again, every investor has made some AI bet that went from 1 million to 10 million and then back down to 1 million in a 6-month period. So the questions are coming stronger now is, how do you keep up? How do you defend yourself against the onslaught of copycats and other people that, can start when a new model comes out, can just start fresh with that new model that might have a new set of capabilities. So it's a really fun and exciting time, but, stakes are higher now than ever before.
What would you do different? Or like differently if starting again in 2025, especially in the AI era where you can maybe build things faster and differently and less of a team. Like how puzzle would have been different now?
The one competitive advantage outside of like some data moat or some technological breakthrough that is somewhat unique, but in like sort of a general sort of company, is speed and momentum. And so if that is the case in speed and momentum, then you work your way backwards to try and optimize for the things that are going to give you the highest leverage on those two things, which would be being in person in San Francisco. Those to me are the two things that I think are the fundamental truths of anybody that is really trying to build something huge and ambitious. So I'm in San Francisco. I'm here for that exact reason. I would do it over again. I would be 100% in real life. We started during the pandemic, so we're a remote company, and there's a lot of advantages to that. But in today's world with speed and velocity, I think being in person is the best way to maintain really clear communication, alignment when things need to shift, when you need to adapt faster, getting everybody together and adapting and aligning and asking questions. It's hard to do that on a video.
Yeah, I mean, in person is very different, and also San Francisco is like such a unique place where it's not you not necessarily work harder, you just work in a different mode, right? It's you go in on the corner to go to a coffee shop and you run to another founder and you have this 5 minute conversation and maybe can unlock something. Like the amount of serendipity that happens that's unplanned is definitely outstanding, and I couldn't agree more with you. And maybe one last question for you is, what's one piece of advice you'd give to founders that just starting their journey?
Well, I've heard a lot of good advice. I've heard a lot of bad advice out there, and so I'll tell you the one thing that I try and stick to came from Y Combinator, and I think Paul Graham, which is stay focused on your users. It's easy to make one user happy, and then 10 users happy, and then 100 users happy, and sort of grow from there, rather than like 1,000 or 10,000 people moderately happy that really don't care. So focus on your users and make them love you so much that they're just telling their friends about you without you incentivizing it.
I love that. I think like if I am to summarize our conversation in like few bullet points, maybe it would be, you know, think big, create the growth trajectory, do your research, stay true to yourself, and maybe talk to your users. And that would be the four main bullet points, but I'm sure there's more that
And let's just
would be
add
my
one
advice.
fifth one to the end, which is just don't forget to have fun.
Yeah, that's important. I think like the founder burnout is real, and it's a topic for another day. But I think once you build something that you're passionate about, and building the team is there should be some fun along the way.
Yeah,
But
totally.
thank you so much, Sasha. I really enjoyed our time and conversation. I'm sure it would be super insightful for all the early stage folks that are building in the trenches. But thank you for your time.
And thanks for having me. Thanks, Anastasia. It was great.